Hey everyone, Michael here. Today I'm going to teach you guys how to find and use divergences to make consistent profits, and I'm going to give you guys a free tool that's going to find all of these divergences for you for free. No reason to pay for it if it's for free. Now, before we get started, please make sure to subscribe. YouTube does not really push up my educational content too much. It's too busy promoting BitBoy and the other guys out there. Now, a quick recap on divergence. A divergence is when a price of an asset is moving in the opposite direction of a technical indicator. Very simple, very easy to understand. Divergence warns that the current price trend may be weakening and that a new trend is about to form. RSI, oscillator, etc. These are some of the indicators that you guys will be using. Stochastic, a lot of it, okay? Now, what is a bullish divergence? A bullish divergence occurs when the price of an asset is making lower lows, but a technical indicator is making higher lows. This can be a sign that the downtrend may be losing momentum and that the price may start to rise soon. Traders may use this as a signal to buy the asset with the expectation that the price will increase. It's important to note that bullish divergence is not a guarantee that the price will go up, and traders should always use other technical and fundamental analysis techniques in conjunction with divergence to make trading decisions. Now, what is a bearish divergence? A bearish divergence occurs when the price of an asset is making higher highs, but a technical indicator is making lower highs. This can be a sign that the uptrend may be losing momentum and that the price may start to fall soon. Traders may use this as a signal to sell the asset with the expectation that the price will decrease over time. It's important to note that bearish divergence is not a guarantee that the price will go down, and traders should always use other technical analysis and fundamental analysis techniques in conjunction with divergence to make trading decisions. And now here's one that you guys may not know about. This is hidden divergence. A hidden divergence is a type of divergence that is not immediately visible on a price chart. It occurs when the price of an asset is making a series of higher lows, but the underlying technical indicator is making a series of lower lows. This can be a sign of underlying strength in the asset, and traders may use this as a signal to buy the asset with the expectation that the price will continue to rise. Similarly, hidden bearish divergence occurs when the price is making a series of lower highs, but the underlying technical indicator is making a series of higher highs. This can be a sign of an underlying weakness in the asset, and traders may use this as a signal to sell the asset with the expectation that the price will continue to fall. Again, it's important to note that hidden divergence is not a guarantee of future price movement, and traders should always use other technical analysis and fundamental analysis techniques in conjunction with divergence to make trading decisions. Now, we're going to talk about four today, and these are the only four you guys have to worry about. Hidden divergence, weak divergence, medium divergence, and strong divergence. Of course, you want to have a strong divergence if possible, but medium, weak, and hidden are all useful types as well. And as we learn more about these techniques, you guys are going to see, hey, which one works the best for Bitcoin? Which one works the best for Apple, Tesla? You guys will find a list, and you guys will be able to see over time which ones are more profitable for each individual stock, and you will build your own list off of that information, okay? So, starting off with weak divergence, this is what you guys are looking for a bullish weak divergence. You're looking for the price to be making lower lows, but the indicator is going to be making equal lows. So not higher highs or lower lows. It's just going to be staying steady eddy, okay? Now, for bearish, you're going to be looking for the price to be making higher highs, but the indicator to be making equal highs. So it's not moving up any higher. It's still staying around that same level there, okay? Now, this is weak. Usually this indicates maybe a smaller move. This is nothing groundbreaking, okay? But you want to be aware of it, especially if you're looking to maybe enter the position or exit the position. Next, we have medium divergence. This is when the price is staying steady, making equal lows, but the indicator itself is making higher lows, okay? This can be like, hey, the sideways trend is getting ready to end, and we're about to see an upward trend from here on out, okay? Now, on the other side here for bearish, we're looking for equal highs on price, so you can imagine just some type of heavy level of resistance, but the oscillator itself is making lower highs. That means it's weakening, and that you could probably see it to be, you could probably see the price action being rejected off of whatever resistance is there, okay? Equal with the bullish, you're looking at that support level. Now, this is what I like to use primarily. This is a strong divergence. This is when the price is making lower lows, but the indicator is making higher lows. On the other side of that, again, bearish, you're looking at higher highs, but the indicator itself is making lower highs. Now, normally when I use this, I want to be trading some type of breakout or breakdown. If we're about to break out and I see this type of strong divergence, I'm going to buy expecting a breakout. If you want to buy before the breakout occurs, save a few bucks or making a couple extra bucks, if you will, this is usually the indicator or the tool you're looking for right here, a strong divergence. On the other side as well, if you think something's about to break down and you see this very strong bearish divergence, I would actually enter the position a little bit earlier, just a small one, and then I could always double down if the breakout does occur later on. Now, here's the one that's a little bit more complicated, a hidden divergence. Most of you guys, it'll take some time for you guys to get this because it is a large amount of trial and error here. Again, going off of which stocks it works on, which stocks it does not, which crypto it works on, which crypto it does not. For hidden divergence, for the bullish, you're looking for higher lows, and for the indicator, lower lows, not lower highs, lower lows, okay? If you find that and you're close to a breakout, you can still play that, but personally for me, I wouldn't buy it before the breakout. I would look for it. I would say, hey, this means that when it does break out, if it does break out, I'm going to put even more money down on it because this is another bullish reason for me to be buying this asset. Now, as far as bearish hidden divergence, you're looking for the price to be making lower highs, but the indicator to be making higher highs. Again, it's useful. I'm not going to be trading solely off of this, but if I see other indicators saying, hey, this is bearish, I want to sell my position or I want to open up some type of short or maybe a put if I'm in options, this just means that, hey, I'll put a little bit more money in it because I'm more confident now because the hidden divergence is showing that we're looking at a bearish trend, okay? Now, something that you guys need to understand here, whenever we do the strong divergences, I like to use this with patterns, all of these divergences with patterns. There are so many patterns out there. Just look at this list. There's about 20 right here. I like to use them in conjunction with these patterns. I don't necessarily just trade off of the divergences. I don't really recommend that personally. However, if you partner these up with the pattern, you guys can say, whoa, well, this is a pattern. We know how this works out. Patterns usually work about 80% of the time to 90% of the time, and those are great profit margins right there, right? Now, if I see any one of these patterns, guess what? And I see a bullish or a bearish divergence, I'm going to play it that way and I'll be making more consistent profits because of it. Now, here's something that I think you guys are really going to enjoy. Now, here is a chart of Bitcoin. You guys can see I have a whole bunch of indicators on here. You guys don't have to have all these indicators and be looking for the divergences of higher highs or higher lows and stuff like that. You guys don't have to do that. I'm going to make this very, very easy for you. Let's get rid of all of this stuff, all this stuff, all this stuff. And now we just have a plain Bitcoin chart, okay? What I want you guys to go do is go over here to indicators, metrics, and strategies. Now, you guys are going to type in diverge. Just type in D-I-V-E-R-G. You can type in full divergence if you want to, but you're going to see I have one starred right here. Divergence for many indicators version 4. I want you guys to click on this. All right. Now, what this does right here is this will put down a whole bunch of divergences on your chart, okay? Now, this can be a little bit confusing because maybe some of you guys don't even know what an RSI, CCI, CMF is. That's okay. You're just looking for those divergences. Now, because they're different colors and they're not really blue or yellow, we don't really associate that with going up or down. Like we normally associate with green and red. What I'll tell you guys to do right now, just to make your mind understand this a little bit more, is go over here and hit the settings icon for the actual indicator. Now, I want you guys to do two things here. It'll say divergence type. I want you guys to go to regular and go to regular hidden. So you guys are getting regular divergences and hidden divergences as well. After that, I want you guys to go down here and make sure everything you want is checked. For me, I don't actually change this at all. I make sure everything looks just like this. But if I go down a little bit further, you're going to see the colors, okay? Positive regular divergence, I like that to be green, okay? Now, for negative regular divergence, I normally want that to be red. I don't know about you, but I want a red signal to show that it's going down, right? Now, for positive hidden divergences, what I normally do is I just make this a lighter shade of green, all right? That way it's a little bit hidden. Yes, it works in my mind, but you can set it to whatever color you want to. And as far as red, I like to make it into a lighter red. All right, so hidden, a little bit more hidden, deep red, lighter red. I hope this makes sense to you guys. I don't change anything else, and I hit OK. And now I can see every time there's a bullish divergence, I get a little bit of an alert, and you guys can see it right here, okay? Now, if we go back in time a little bit, just for Bitcoin's assets here, we can check out a stock in a second. You'll see, hey, we had a divergence here, it popped. A divergence right there, it popped. Maybe a little bit late, honestly, so be careful there, but maybe if you're looking at a 4-hour chart, it might show something different. Again, right here, it popped. Right here, it did not drop. Right here, it did drop, so that was good. Pop there, a couple days. Pop here, one day. I don't know if that was too late or not, right? Pop here, negative down there, negative down there, negative down there. Pop, pop a little bit over time. So this is what you guys are looking for. This makes everything so much more simple, and you can turn off which indicators you don't want to use. Maybe you guys don't want to have all of those indicators. It's okay if you don't. Sometimes the list can seem a little bit overwhelming, but you're going to see everything you need to do right here. And this works on all types of time frames here. So let's go over to the 4-hour chart. Let's go to auto so I can separate this out a little bit more for you guys. And you can see on the 4-hour chart, it worked out okay, a little bit, not as much as you would like. Right here, it worked out pretty well. Right there, it worked out pretty well. So normally what you're looking for is some type of breakout, though. That's what I'm looking at. So if I could try to pair this with something else, a little bit of a bearish one right there, or a bullish one. I guess what we would be looking at right here is something like that. You see the bearish signal, you see the breakdown. This is how I would use it. So I see the bearish, I don't buy there. Maybe I just more skittish, if you will. And then I wait for the breakdown. I'm like, hey, breakdown after the bearish divergence, I'm all in. And you can see how that profit ended up being a lot better. And then, of course, you could just pair this with some type of Fibonacci extension tool, like maybe that from that high to there. And you can start scaling out here, here, or somewhere down here if you really trusted this one pretty strongly. That's how you do it, guys. Hope you guys all have a great rest of your day, and please make sure to subscribe. If you guys have any questions, please leave them down below.